Well, I think the chances of a recession next year are actually quite low, and I think one of the ideas that we've had at our shop is that there's a decent chance we're more towards the middle part of this business cycle than the end. If you look at kind of the first principles of what creates recessions, and what creates recessions most of the time is higher inflation and the Fed killing it, a policy error, or some sort of exogenous event. And the last one, of course, we can't forecast any better than anyone else. But it seems to me you have to essentially be betting on a policy error right now, and I think it's unlikely, is my own opinion.
People would say the policy error, now if you listen to the rhetoric today anyway, they say the policy error is if they raise tomorrow. You agree with that? You think they're in the clear to do that or not?
Well, listen, I personally think the markets are telling the Fed that they should take a breather. There's, in my opinion, inflationary expectations are very well anchored. The markets are telling you that they should take a breather. In our opinion, you're most likely going to get what we call a dovish hike, which you're going to get a hike, but the language is going to soften dramatically, and it's very unlikely that you're going to get the 3 or 4 tightenings that people thought, just a couple of months ago. It's probably going to be more like 0 or 1 or maybe at most 2, but that would be more back-end loaded in the latter part of next year.
Should the Fed listen to the markets, Jason?
I think it should. Tyler, I'm of the view, just as somebody who's been doing this a long time, who runs an economics shop, I tend to think the markets are better economists than economists. And you always get into trouble when you don't listen to the markets. And I think the markets are telling you now, to me, this is very reminiscent of early 2016. You may have remembered the Fed talked about tightening 4 times in the early part of 2016. And everything went haywire. Credit spreads widened, emerging market stocks got hit, the stock market got hit, and then ultimately the Fed only tightened once when all was said and done. And in my opinion, this is somewhat similar. The Fed should give itself a lot of credit for trying to normalize rates, but there's a limit to what you can do in a world in which a lot of rates are still close to 0.